All right, so we're gonna try to make this short and simple. This is the strategy I use, and I'm gonna give you some examples at the end. So hopefully you guys can follow along because I know I post a lot of stuff about my strategy. But shout out to NetPicks. This is pretty much the strategy I got from him. I don't know him personally. I'm not being endorsed, but basically, I got this. I've been, trying to trade the 10 minute for years, the everyday daily trading, 15 minute, 1 hour. I even tried the 1 minute, the 5 minute, all that good stuff. But this day trading strategy has been the most. I've been the most profitable with this strategy. So we're gonna go over it. And if you have any questions, just go back and rewind it or post it down below. And if you like this strategy after I show you this, make sure you hit the like button. And if you're not subscribed, hit the subscribe button and post a comment if you use this strategy or if you back tested it and tell me your winning percentage. All right, the daily time frame trading strategy. We will only use two trading indicators, which is the 20 period simple moving average SMA. You can go and trade in view and get that. The 5 period ATR, which is the average true range, and then I'll do a video later on about the average true range. All right, so all we're gonna do is the trading rules always follow. For buys, you will wait for price to break above the 20 period moving average. Wait for the two candle lows, must plot completely above the moving average to point out a trading signal. You got that, guys? Completely above the moving average. After the second lows plot, place a buy order stop at 20% ATR above the highest high of the candle. Set your stop at 20% ATR below the moving average. Trade your stop loss using the moving average. And look at this AUD. AU. Let's see. Next. All right, as you can see right here, entry at the 20 period times 5 ATR. You see the setup candle, the green candle. All right, the price broke above the SMA. You got your two candle lows. All right, above that, basically look up top. You got your 20 period times 5 ATR, and then you trail your stops. All right, you got out about 189 pip gain from there. All right, upon completion of the candle, you can see it is the second low above the average. We place a buy order stop at the 20% times 5 average true range. The initial stop loss is placed at the value of the moving average. All right, trail your stops. First trade exit is 146 pips from entry. If you don't see a setup to the downside, but we do get another valid setup. All right, same thing. Let's go to the next one. All right, and as you look at the setup for Bitcoin, all right, BIT/USD. All right, so remember there is some losses in trading. You're not going to be 100%. All right, and then later I'm going to point out exactly how you can set it up better so you're not taking straight losses every time you see a two candle lows or a two candles high. All right, you have to accept losses in trading, and the first trade is a loss when placed at the retrace. Basically when you place the trade, it retraced 4.5% from entry. No sooner had you entered, we had an immediate price reversal and it hit the stop loss. The next setup didn't trigger, and for those that understand price action, you might have skipped this trade due to the momentum move to the downside. I know me personally, when I see those long candles, those momentum candles, I stay away from it, especially going in that direction, because usually it might have about 2 or 3 more candles and then it'll reverse back up. All right. We then get trades that don't trigger due to the ATR buffer. And you remember you have the ATR buffer. So the buffer basically helps you stay out of losing trades. All right, because you could do the 20% times the 5 period moving average. All right. As you can see, we finally get a long setup that triggers at 30% from your price entry. As you can see right here, you see the entry. All right, and then it went against us. Then you see the one not triggered. All right, and then you see the entry triggered, and you entry at 20% times the 5 period moving average. Now, when you say the 5 period moving average, that might be different. All right, it ain't gonna be 5 ATR. It'd be whatever the ATR says on there. Okay. All right. So working around the support and resistance. This is not one to. So basically, what he was also saying is that he's not one to make tweaks to avoid losses. But if you look at it and use common sense and price action, you can tell when something is in consolidation. All right. As you can see right there, you have the one setup, then it goes the other direction. Then you have the second setup for a sale. Then it goes, you get into it, and then it goes completely the other direction. All right. So if you're looking on a daily time frame, I'm not gonna lie. I would say 6 times out of 10, you can tell when something's consolidating. And the reason why you can, and what helps you with the consolidation is the ATR buffer that helps you from getting stupid trades. All right, the first trade on the left is the valid price. Eventually pulls back and stops us out for the initial risk. And that's a good thing. As you can see, that's the first trade on the left. All right. All right, price begins to put in action. That begins to range, marking the highs and lows of the immediate range, and can help avoid being in trades that immediately reverse. Some traders may have begun to expand the range when you see the lows and the low of the range break to the downside. Price does not head back into that range. As you can see, the range break, all right, and then it heads back into the other direction. All right, by doing so, the price would have traveled far from the 20-period moving average, the 20-period average price that can lead to a snapback in price. It would be the second 2-second analysis of the chart to have you decided to step aside from the crude oil chart and to another instrument. All right, as you can see it, boom. Let's go to the next one. All right, summary. All right, using this daily chart to trade is stressful than the fast pace. Oh, I'm sorry, it's less stressful. All right, remember, using the daily chart to trade is less stressful than the fast-paced day trading approach. All right, coming in to check the market once per day, set your orders, and check the next day. Allow traders to focus on other streams of income. Yes, fewer trades, but for me, it was the right decision. And that's actually Net Picks talking. But for me, also as well, working a 9 to 5 as well, checking the chart every day at 1700 or 5 p.m. Central Standard Time is best for me because I can enter a trade, then I come back and check it the next day. Later on that afternoon, and I can see if I need to get out, jump in a trade, or move my stops up to break even. All right. Understanding that some markets using the moving average as your stop loss location can be a little rich for your account size. Ensure that your trade markets that you can afford the risk. And the good thing about this was rolled along about 7-8 years ago. But at the same time, now we have prop firms. But you can still use risk management. You have a 100K prop firm trading account. You use risk management. You can definitely trade on the daily time frame, and you can even trade on the daily time frame with a smaller account. You just have to use a better risk. But the thing about it is, some of you guys, you want to get rich fast, so you want to double the lot size or triple the lot size, and then next thing you know, you are broke and your account is wiped out. All right, think the bigger picture. Your trading account may thank you for it. All right, this is my trades this week, this month so far. As you can see, my 2 candle highs. I'm going for a sale. My 2 candle highs up top. All right, and then it actually hit my TP today, which was let me think. I think it was 100 and plus pips. I can't remember off the top of my head. All right, so let's go to the next one. All right, currently still in this trade, as you can see. All right, 2 candle highs, 2 candle highs. All right, and boom, it actually retraced a little bit, but now we back into it. All right, still in that trade. All right, as you can see up top, this is AUD, AUD Swiss. All right, 2 candle lows for a sale. I'm not gonna lie to you, I like looking for sales. I too much don't like looking for buys all the time. All right, let's move to the next one. All right, AUD JPY. I think this was in May when this trade took place. But if you look at it, those the first 2. You actually could have got out right there, and then a few days later, I would say a week later, you could have jumped back into in June or the end of May. All right, and you see pound JPY has been on a tear since the beginning of May. I think it was May 3rd, and it's been strictly going up. So if you held that trade, you're in the money. All right. Again, look, 2 candle lows for a buy, 2 candle lows for a buy. All right, this is the trading results I had for this week. All right, short and sweet, short and sweet. All right. This UC, actually I got out of it because Juneteenth is tomorrow, so I got out of everything. I don't want to come back in the market and go ham. All right. As you can see, USD Chef 241, AUD Chef 104, and CAD Chef 3,347 bucks. All right, and that was good for the week. All right, so look, reminder, don't make it complicated. All right, you only need 2 lows plotted above the moving average, regardless if the second low is higher than the first. All right, the color does not matter. Buy stop the highs of the high. Don't overcomplicate it. I'm gonna read that again. You need 2 lows plotted above the moving average, regardless if the second low is higher than the first. All right, the color doesn't matter. Buy stop the high of the highs. Don't overcomplicate it. Look, let's go back. Let me just go back some. All right, boom. 2 candle lows. All right. I personally have it color. It's been working for me, and I like to tend to use the same color. I tried using the black and white. It messes me up when I'm at nighttime. All right, let's go back. Just so I want you to screenshot this one, and I'm actually probably post it down below so you guys can look over it. All right. So remember, wait for the price to break above the 20-period moving average. 2 candle lows must plot completely above the moving average to signal a trading signal. That doesn't mean what I mean by 2 candle lows. This is for a buy. Must completely plot over the 20 SMA. No wicks, no nothing. All right. Place the buy stop order at 20% ATR above the highs of the 2 candles. Set your stop 20% ATR from the moving average price. Trade your stops using the moving average. All right. Sales are pretty much opposite. On buys, you're looking for the 2 lows, and for sales, you're looking for the 2 highs. All right. All right. Again, let's go back some. Let's go. As you can see, look, same thing. All right. Price is broken. As you can see, it's some wicks there, but there's no wicks on the SMA. All right, even right here, clean. Make sure it's clean. Boom, clean move right there. Another clean move. All right, got out. And you can just, like I say, with the good thing about trading the daily time frame is that every day you come here at 5 o'clock and look at the chart, you can actually keep going. 1 point, your risk can be 1 to 1, but then you can go 1 to 5, 1 to 6, 1 to 7. As long as you are in profit and you keep trailing your stops, you're good to go because you're already in profit. All right. Look at that. AJ, you would have rolled that all the way up to the moon. I know people hate when people say that, but you would have rolled it up to the top. All right. Look at that. Still going, trailing your stops. So if it decides to reverse on you, you're in profit. All right. This again, my trading results. All right. Reminder again. You need 2 lows plotted above the 20 moving average. All right. Regardless if the second low is higher than the first. All right. Other than that, I hope you guys have enjoyed this trading strategy. This is what I use. Again, I got this from NetPicks, and I, back tested it, and this has been the one that worked for me. Reason being is that, like I said, I tried to trade everything from the 1 minute time frame up to the 4 hour time frame, and just haven't had the same results as I do as the daily time frame. So other than that, I will post another video here shortly of the trades coming up for the end of the month or going into the next month. All right, other than that, you guys have a blessed day.